Hi, welcome to the Generosity Wealth Management video. This video is the second quarter review and the third quarter preview. I'm going to try to spend most of my time on the preview because no matter what we do, we can't relive the second quarter. Hopefully we can learn from it, but we can't, we can't redo it. The second quarter for the stock market indexes, if the quarter had ended a couple of weeks earlier, then we'd be saying, oh man, what a horrible quarter. But, well, it ends on June 30th. And the last week of June was a nice pop-up in the equity markets. All of April was pretty good going into May, and then we just hit a big slide for about 6 weeks, all through May and June, except for this last week in June. Relatively low volume, though, on the exchanges. Bonds were just kind of chugging along through the quarter until the last week, and the last week was a really bad week for the bonds. I think what was happening is with quantitative easing ending, big buyer of bonds, that bondholders were like, wait a second, I don't want to be the greater fool holding these bonds. The demand for these bonds is going to be less, and so I better get rid of them now. And so they got out of them and moved into equities. Now let's talk about the third quarter for just a sec. I want to tell a little bit of story about emotionality. There's these mythical creatures called sirens, and they lived. This is a Greek story with Ulysses and the sirens. And the sirens lived on these islands. They had this beautiful music. Sailors would become enthralled with the music, want to go towards the sirens with their boats where the rocks were. They'd hit the rocks and get a big hole, and the boat would sink. Okay, bad stuff. But Ulysses, he understood this, but he really wanted to hear the beautiful melodies that he had heard so much about. So what he did is he gave wax to the sailors on the boat that he was on and said, "Put this in your ears and tie me to this pole that's on the boat. And no matter what I do, don't untie me." So they got close to the island. Ulysses was able to hear the beautiful melodies. He went stark raving mad. But because the sailors had the wax in their ears, they didn't hear it. They sailed away, and they were just fine. Now, Ulysses' plan saved his life and the lives of all those around him because he had a plan, and his foresight and his non-emotionality about it is really kind of something to be admired, and the kind of the lesson in that story. So why do I say that? Right now, it's very fashionable to be bearish, to be down, on the economy and the recession and investments, and the world is going to end. I mean, I'm on a significant number of blogs and things that I read, and it's very fashionable to say, you know what, Armageddon is right around the corner. And I was just 2-3 nights ago at a social gathering, and it wasn't, is it going to happen, but when is it going to happen? They're actually trying to argue and pinpoint the actual month that the 2008 crisis is going to hit again. I listen to all that data. I look at yield curves, both in the U.S. and in other countries. I look at the various data that keeps coming out. I look at the balance sheets of companies to find out what their cash balances are and what their profitabilities are. I listen to what's happening over in Greece, which if you're not paying attention to that whole Greece debt, austerity plan, and then the bailout, you're missing good stuff. I mean, that is just fascinating. It's better than any Jerry Springer show you can imagine. So I have to take all the stuff into consideration, and I have not moved from my analysis 6 months ago that this will be a positive year, 2011, for the equity markets and for the bond markets. And how positive it's going to be, I don't know. But you know what? I am still going to have a position. I'm going to still, in the equity markets, I am still going to be modestly positive in my outlook for this year. When I look at the yield curves of the kind of the other countries, the Brazil and Russia and India and China, some of the not quite developing countries, but not quite the been on the world stage for a very long time, like Japan, Europe, and the United States. They have a curve that's going from normal to flat to inverted. They're about flat right now, and that causes me concern. That will not bode well for them, so I want to be more U.S. If we're relying an awful lot of the growth going forward on these various countries, and so if they start to go towards a recession, then that's going to impact us and here in the United States. But that being said, I think that we're more willing and ready and able to handle that, particularly since when you look at the cash positions of corporations, it's actually quite large. When you look at the profitability of corporations right now, they've gotten rid of a lot of the kind of the fluff, kind of the efficiency. Now, when I say fluff, please don't call and email me with bad things saying, oh, wait a second, they got rid of a lot of people, and that's not fluff. No, they did get lean. And so that's a good thing going forward, even if there might have been short-term some pain that they might have done in their own austerity measures. And so I am continuing to be kind of mildly bullish when most people that I have around me that I talk to are from mild bear to full-blown Armageddon is right around the corner. I'm just not in that camp. I still feel that biotech is going to be the next big thing in the next 10 years. I continue to think that gold is something that is to be considered. And so, you know, if I'm wrong, I believe that gold will dampen that wrongness, because at the end of the day, nobody knows the future. I certainly don't know the future. So what I'm going to do is I'm going to try to have wise diversification, not naive diversification, transparency, and of course communicate and keep the expenses as low as possible, because they can, of course, drag down any kind of a portfolio if you have too high of expenses. So anyway, I am not making any major changes for the third quarter. I've had an opportunity to go through all of the statements for clients. They were actually mailed out on Saturday, and so hopefully clients have gotten them already, either Tuesday, Wednesday, or Thursday of this week. But I'm not making any huge major changes. I will continue to have my videos so that you know what I'm thinking about, because if the data changes, you know what, my opinion might change. And I have an opinion more than just once a quarter when I do my quarterly review and preview. So anyway, that's where I am right this second. I encourage you to give me a call if you would like, or an email with any thoughts or refutation of my conclusions. I am my business is growing. I'm actually very proud of that. And so if you know of somebody that you feel I should speak to who would like some guidance, you know, I'd love to talk with them. 303-747-6455. My name is Mike Brady. I'm the president of Generosity Wealth Management. And I have a couple disclaimers here at the end that you should definitely stay tuned for. But in the meantime, I hope you have a wonderful week. I hope you have a wonderful quarter. And I'll do another video in a week. Talk later. Bye-bye now.